Hi, CF Liu again, independent licensed financial advisor in Malaysia. How to pay less tax by maximizing your tax relief, but still by staying as a responsible taxpayer. Now this is very interesting because I'm talking about using or leveraging your father, mother, your parents to pay less tax. Now that might sound like a very bad thing, but actually it's not. If you are able to maximize it, basically you are a good son or a good daughter. And you know, you could actually disagree with me, but just be less skeptical and just watch the entire this lesson up to the end. The first thing you want to, before you actually determine how you can pay less tax by using your father and mother, you need to know if your parents are well, kicking and alive. And if yes, then you want to know what are their health condition. Whether they have any medical condition or health condition, how is their health condition, and whether it's bad, whether it's good. If you don't know, just go and ask. Then the next thing to know, to consider is do you actually chip in to pay for any of their medical expenses, medical treatment, or their medicine and all that, hospital admission, whether they have any illness, their medication, and the next thing to do is if you did not pay for that kind of medical treatment, medical expenses or what and things like that, then the next question is why not? So imagine that if you do, you do chip in to pay for their treatment or medication, maybe not every time, but most of the time or even sometimes, then you want to know that whether you have a receipt or invoice that is available, because that is again very valuable. That is the evidence for you to actually claim tax relief regarding to your parents' medical treatment. So you end up paying less tax. That is how it works. To understand whether those receipts or any invoice document, whether it's in their name or is it in your name, very important, right? Now for most cases, if the payment is made in cash, so it really doesn't matter whose name it is. But for the sake of compliance, you only want to claim tax relief for medical expenses for parents if you are really paying for that. Now imagine if you give your parents certain kind of monthly allowance, right? That's what all good son or daughters do, and they actually use that money to buy for their pills or some medication and all that. So they're actually using your money, but you are not directly paying for that. But they go to pharmacy and they buy and they buy that when there's a receipt, right? On that. So how do you handle situation like that? So if you really want to know how to handle this situation like that, so when you are audited by Lembaga Hasil Dalam Negeri, you don't get yourself into trouble. If they ask you about that and then you cannot answer, basically you'll be penalized. So if you really want to know how to handle kind of a situation like what I just described, just comments below, and I'll be able to help you, give you some perspective to how to handle that. Now the thing is, if your parents are healthy, right, they are not on any medication, they are not on any medical treatment, which is good, and they are not financially dependent on you, even though you give them some allowance and all that, you may, and I'm not saying you can, you say you may be able still to claim up to like 3,000 for both father and mother when it comes to your own personal kind of tax relief. But to be eligible for this 3,000 father and mother, which is like 1,500 for mother and 1,500 for father, to be eligible for this tax relief, there are a few questions you need to ask before you even think of claiming this. Because if you claim for this part 3,000 for father and mother, of course both of them have to be alive and kicking. If they are deceased, then there's no point. You don't want to claim a tax relief for a deceased parents, right? That is just not right. So like I say, the question you want to ask is, are they alive and kicking? And the second thing is, where do they currently stay? Stay in Malaysia or they stay overseas? You also want to know what is their income level on a yearly basis. So when I say income level, I mean maybe they have some rental income from the property, maybe they have some pension, maybe side income and all that. So you want to know what is that the last declared annual income for your parents. And the other thing to know is like, how old are they? Are they like only 40, 50, 70 and all that? So because there are few criteria that enable you to actually claim for these parents tax relief, not the medical treatment, but just by having a parent, but you must fulfill some of these criteria. What are these criteria? If you really want to know, just leave your comments below and we'll get into it, or you can actually directly ask, like, you know, provide me with some, this question don't need to provide us with the name, but you know, there are some, provide us with some figures, and we might be able to actually help you with this. Now, the last question a lot of people ask is that they say that, okay, so obviously you may have other siblings. So how do we handle this? If you have other siblings, your sibling might also want to reduce their personal tax payment or getting more tax refund from Lembaga Hasil Dalam Negeri. So they probably would also want to claim 1,500 for father and 1,500 for mother, and you also want to claim. So how does that work? Does that mean that you can claim and they can claim? Both of you and your sibling, everyone can claim 1,500 for one father and 1,500 everyone for one mother, or it's being apportioned and all that. So I can tell you the answer is just leave a comments below and we'll answer you. I'll answer you if this is important enough for you. So that being said, I hope this has been useful, give you some perspective of this tax relief, Malaysian income tax relief related to parents. You are leveraging or using your parents to actually pay less tax by maximizing your tax relief. And I could say this is a high 4 figures kind of tax relief. You can really save quite a lot of tax depending on your situation. That being said, if you like this video, find value in this lesson, click on like and subscribe. And let me know what you think, or leave your question below in the comment section below. And before this video ends, you can actually click on the next tax relief lesson in this video series. And as usual, if investing is your thing, you want to know, to learn how to actually get the most consistent dividends from the market, from any investment today, you know, at the return dividend rate alone is can matching the EPF rate. I'm not concerned about capital gain yet. You know, you don't have to spend a lot of time like stocks trading, monitoring the market. You don't have to spend huge capital. You don't have to spend like effort and time to actually manage your property investment, but still it could actually outperform everything, you know, the traditional property investment or the traditional stocks trading monitoring. I would highly recommend you check out one of our highest view, one of the most popular video on the best dividend investment strategy in Malaysia. So check out that video. I don't want you to miss out because we are having like thousands of views or all that every week. So just check out on that and you might actually learn something out of it besides Malaysian income tax relief. That being said, this is CFD. I'll see you in another lesson.